Good evening to all of you. This is Ranjan from smartfinancing.com. So this particular video, we are going to understand how you can use the delta of the option in a better way. So I will be just taking it in a very layman's language. So you can say now Ethereum is trading at 4312. So this 4312 Ethereum, what is trading, we'll just analyze in our tool, though we have a option tool here. But I will not be using the option tool. I'll be just making you understand in the layman's language. So now it has changed 4309.73. I will calculate. Then I will go to the GAN vibration. Here some vibration numbers are coming. So intraday vibration, something is coming here. So I'll go for this study. So currently at 4309, and it is telling me these are the figures, growth trend, decay trend based on the volatility parameter. So I'll be using this. So this is telling me once this price goes above 4321, it can go for 4340 level. This is what this analysis says. In between, these are the targets, and this will be your stop loss for the up move. So currently we are at 43909. Say 4309, we are aiming for a target of 4340. So this is what, and the stop loss is of 429798 or 4290, anything you can say. So I will be going for the options here. Prices have changed now. I'll be going for the 29th August. Say nearest option, I'll be going for 4300 call option. So call option, put option, both we will analyze. So call option is now quoting at 187, 191. We may get it in the 191. Delta is 0.5, theta is 9.36. So gamma also 00084. So we'll record it. Delta is 0.53. So 191 is the price. So currently it is 192. 191 is the price, or 92 is the price. So here theta also we have theta. So which is our overnight decay factor, 9 rupees 35 paisa. So theta is 9 rupees 35 paisa. So for video I am going a little slow, but when you do it of your own, it will be having a different. So this is being taken when the spot or the Nifty or the ETS was 4305 level. So this price also will write it 4305, 4305. So our entry is coming. So now I'll just open up Excel, and this Excel, everything is visible on the top. So you can say 4305, we'll just 4305 is the reference, and delta of that option is 0.53, and theta of that option is, theta of the call option is 9 rupees 35 paisa, and our strike is 4300 call, and trading at 192. You can put 91, 92. We'll erase all these things. So this is what we are having now. So we will be buying a call option at 4321. Currently we have taken an estimation when it was at 4305. So our buy entry is coming at 4321. So 4321 is the buy entry, and stop loss is 4290. This is the stop loss, 9790, anything. Option slightly you keep wider stop loss. So stop loss, this is our buy entry, and if this buy entry happens, then we'll go, intermediate targets will be there, but 4340 is the appropriate target, 4340. So how we should calculate these terms? So now it is 4305, we have taken an estimate, 4321 we are going to buy, and this reference is taken 16 rupees we are away from the buy entry. So the option is 192. So here we'll multiply the delta. So multiply the delta here, 0.53, 8 rupees 48 paisa. So this is saying us, if we wish to buy this call option, we must buy at 192 plus 8. So this is what? 250 rupees, which 200.50 dollars we can buy this particular call option. What will be our stop loss? So here is 4290. So I will be taking the difference between the reference price point minus our stop loss. This is 15, and this I will be multiplying with the delta. So this is coming 7 rupees 95 paisa. This is my buy entry of the option, and my stop loss for the stop loss will be, stop loss is whatever is my buy entry minus 7 rupees 95 paisa. This is my stop loss. And not only this is the stop loss, what will be my targets? That also we require. So we are saying that it will go to 4320, and we are at 4321 level we are going to buy. So there is 19 rupees difference is here, or $19. In fact, my rupee is repeating in my phonetics. So this is what $10 will be the growth. So my targets will be this is my entry plus this one. So this is how the delta should be utilized. So what I'm doing, wherever the price is there, the Ethereum price is there, I'm taking that. I'm choosing a call option, its premium at that particular time, and that particular call option's delta theta I'm considering here. So my buy entry I am calculating, my sell entry or stop loss I am calculating. So from my buy entry, how far I am distance from my buy entry, that difference I am taking, and that is 16 rupees. How far I am distance from my buy entry, that difference is 16 rupees. I am multiplying it with the delta. So this is coming 8 rupees 48, $8.48. So this $8.48 I am adding with the current price of the call option. So this is giving me the buy entry of the call option. And similar way, the stop loss, for that I am underlying asset I am taking, and taking that distance from the reference point. So that is again multiplying that price point with the delta, subtracting it from my buy entry. This is my stop loss, and targets also similar way. I am calculating from my buy entry to underlying assets, buy entry and targets. So that difference again multiplying with the delta and adding it with my buy entry price of option. This is my target. Intermediate targets you can find out in similar way. Then what is the role of theta here? So delta, it is understood that fantastic way we have understood the delta. So this theta is for 24 hours because it's the 24-hour cycle market. So night 12 o'clock to today night 12 o'clock, again 24-hour will get over. So if I just 9.35 USD divide by 24, so every hour I am having a theta decay of $39.39. So this is what the decay, if I hold this option, for tomorrow, very carefully listen to this. If I buy at $200, hold this option for tomorrow, what will happen? Though the price will come to 4340, but my option price will be 210.55 minus the theta, which is equal to 201. Only 1 rupee it will increase. This is what the theta rule is. If you are holding for 3 hours, then be ready for 0.38 into 3. This much of theta decay to experience. So if 12 hours time is already elapsed, then that theta is gone. Remaining theta is coming into play. This is the very layman's way you can understand. However, this is not the exact way of price movement. You have a gamma to play. How the delta will change, that is also a factor. So theta again linked to the IV. IV increases, theta decay will be slower. IV decreases, the theta decay will be rapid and more than this. So these are the other advanced topics are there. However, for a trader, if you do not have any sophisticated software, you can do the trade in this order. So the easiest way, suppose we are at 4298, 4298 now. If I say go back to 4400 call option, which is quoting at 139, 140 and 143 offer, 139 bid, you may get it at 142 level. So you can say 142 level and its delta is 0.44. So 4296 it is or 97 it is. So 142 is the current premium, 142 USD. So if I buy here, say I am buying here and I am putting 50 rupees below. If Ethereum fall by 50, I'll come out, Ethereum goes up by 50, I'll book the profit. So how much, what will be the stop loss for this one? So 50 multiplied with 0.44, 0.44. So 0.44 if you multiply, so it will be coming 50. I am using the calculator and 0.44. This is 22. So 22 USD. So you can less it if you are buying at 142. Now you can keep at 120 as your stop loss if you are just taking a 50 plus or minus 50. So 120 will be a stop loss, and similar way you'll have same way 164 is your target. So 22 should be added here. So 22 plus or minus you can put it here. So this is the process you can estimate the option premium through the option delta. But one more thing, you have a theta here. So this is for 24 hours. So if this trade is going for 3 hours, if you are buying it and holding it for 3 hours, what happens? There $1 lakh will come. So you will be expecting 164. However, you will be getting only 163. 163 you can get. You cannot get 164. So the reason is there is a theta for 3 hours. And same way your stop loss also for 3 hours. Again, instead of 120, you have to keep a stop loss of 119. The theta decay will impact. So this is the process or easiest process you can utilize the option trade. So this is one example. So what is the other example? What is the best time we should take? Say if you are using other GAN tools like we are telling about the intraday vibration. So today morning also I have given a post on the intraday vibration. So these are the supports and resistance, but these color boxes are the important support and resistance, that is known as your GAN vibration. So each time the low changes or high changes, this particular vibrations will change. So currently, if you say we are at 4293 level, we have gone till 4319 or 10 level. So this is the 18 is one of the resistances coming. Then there is a chain of resistance 4329, 4340, 4351. There is a chain of resistances are there. Similar way, you have chain of support 4306 is a support. Then 4295, recently we encountered this. 4284, it is a support. So what you have to do whenever it is coming to the support of 4284, this is the time to buy a call, and you must say that next support, if it is broken, 4252, if this support is broken, then you quit the call, or else you can wait for 4295, 4306. This supports should be crossed over, then you should book your profit around 4329. So take the delta, multiply with this thing, add it to that your option premium or subtract from your option premium and get the result. So this is a very layman's way you can do it. However, we have a fantastic tool here which can give the option analysis also. So I am going for this and I'll be slightly changing the records here. 29th of August, I have taken call option I have gone for. I'm going for 4340 just now, whatever I have shown you. So this, sorry, 34 I have gone slightly. I'll 4343 4,300 call option. So 188 recently we have seen intraday analysis. So this is slightly giving us a different trajectory. Its delta and other things is coming here. Exactly same thing we have seen in the exchange website also. So here what we are getting here, we are getting the entry should be at 223. Keep a stop loss of 186. And these are the targets. We are at 188 level. This is for intraday. Suppose if we are going for a positional 2 days time frame, we must buy at 195 and 147 will be our stop loss, and these are the targets, and this is for positional 2 days of holding. Theta is being taken out. So this is an easy tool, and those who are opening the account through our referral, they get this tool free of cost. So this is a fantastic tool you can get and utilize it. Not only that, you have option arbitrage, which are the strikes are now having arbitrage opportunities you can get. So you can have a Greek scanner also. Every you can say that which are the strikes having a delta, in which range you can get it, which are the put options are having the delta in this range, you can filter it out. So it will be easy for your strategy formation. Besides that, many advanced tools. So open up your account with any of this exchange and claim the free software and make very good money using this particular tool. Thank you very much. Thank you for your time.